It's time once again for a Bitcoin update video, and of course we'll be going through the technical analysis. But not only that, I also want to show you a bit about the bear market bottom. Because if we look at the past, which we'll go through in the video as well, a bottom was never formed with such a V-shape, where we then just started rising. That's why we might still be facing a longer, truly exhausting period ahead, possibly even with lower prices. I want to go through that with you. Of course, we'll also be looking at level 2 data for the current period. A daily liquidation map shows that we have something below us at 62,000 US dollars. However, if we look at, for example, a 7-day period, we see that around 60,000 there are very highly leveraged positions with an incredible amount of liquidations, over 3 billion US dollars just up to this area here. Of course, we'll go through that on the chart as well. Naturally, we'll also look at the liquidation heat map. There's still quite a bit just above us, as you can see here. It could be very, very interesting if we end up collecting that as well. Because if we then look at it on a weekly basis, just so we cover that as well, there is actually quite a large cluster around 60,000 US dollars. So all around 60 to about 59,000 US dollars, there's still quite a bit lying there. And I want to show you in the level 2 data, if we look here now, where have the orders been placed and how many are there? And we can already see that the area I just showed you also has a larger cluster. I'll also show you this smaller cluster here and explain what it means. It has something to do with yesterday's pump due to the news that Trump put out again so that we don't experience any attacks from the USA against Iran. And of course, a lot of liquidations have accumulated in this area where now large market participants, whales, institutions or whoever have placed new long orders because these are also very likely to be liquidated. But that will be the next big cluster. Overall, it doesn't look that full right now, but there's a reason for that. I only included orders over 5 million US dollars, and you can see that on the right as well. Some people have already placed pattern orders here. As I've told you before, when we see a pattern like this, where, for example, we repeatedly have similarly sized orders with the same timestamp, it indicates that this is an institution or a whale aiming to build up as large an order as possible. But we can see here that they apparently placed their orders a bit earlier as well. Here too, you can once again see a very strong pattern with the time and the order size. All of this is exactly within this area here, and the next one is just below it. So these are very, very interesting levels. Otherwise, we can also see the whales with over 10,000 Bitcoins. That's the yellow area here. They still haven't started buying yet. No matter how much I zoom in, they still aren't buying yet. And with prices this low, I can't help but wonder, why aren't they buying? We've had such a strong drop, as you can see here, that we're going to take another look. It was more than a 25% drop and the big whales still aren't accumulating. But we can also see this with the ETFs. They've actually been selling off every day since May 14th, at least when it comes to Bitcoin. They did accumulate a bit of Ethereum once, but otherwise we're seeing massive sell-offs here. And now after this big drop here, we've had a small recovery which has gained a few percent. So with this drop down here, we recovered about 7 to 8% in the meantime. But there's a pattern I want to show you, and we'll get into that right now. First of all, if you haven't subscribed to my channel yet, I would really appreciate it. Let's reach the next 1,000 subscribers together. I really try to provide as much neutral value as possible here. You get a lot of passive income trading bots, exchange-owned trading bots, which I share with you here, just as I've been doing for over 2 years now. But one video I really want to recommend to you is simply about these altcoins for the next bull market. In my last video, I addressed questions from the community. Super interesting altcoins. The video is a bit longer, but it also has timestamps for you. But in that video, I go through a few analyses, which coins I have bought and which ones I still plan to buy, and what I find interesting there, as well as my price target levels using my Fibonacci strategy, with which I also sold Bitcoin, Ethereum, and XRP right at the top. But now back to Bitcoin so we can take a closer look at it. At the moment, as you can see here, I've already set up a small pattern of trend lines. We all know the bear market trend line. I can remove that now. Also here, yes, the bear flag that was talked about for so long has broken downwards. And now, before we go into the detailed analysis, you can already see here, this actually looks very interesting with a retest. This here also looks good, and this red box is a huge liquidation cluster on a 2-year basis. Between 58,000 and 45,000 US dollars, there is a lot going on. We might actually see a support bottom forming here, something that could come together in this area. But before we move into the smaller timeframes, and I talk a bit about that, we first need to look at the following. In a bear market, it's often the case that we see very strong sell-offs, like we did here, for example, and then a kind of accumulation phase follows. Of course, this accumulation phase already had its percentage gains from here, for example, about 10, 11, 12% or so. But it's a preparation for the next move. What happened then? Another massive sell-off. Then, first of all, a very strong accumulation phase here in this area. You can see that very clearly as well until this flag gradually developed further. It wasn't like that at the beginning either. Maybe you can remember back. At first, the flag looked more like this and was also like that in this area. That means it gradually expanded a bit until, in this case, we actually had the completed pattern, which looked roughly like this before we broke downwards. Now, there's one thing we mustn't forget. We have actually had, and this shouldn't be overlooked, a price drop of nearly 30%. That's what we've had. Bitcoin has dropped again by 28.55%. While many people were very, very bullish here again, this was definitely a very big warning signal with major rejection zones. But after such a price drop, I wouldn't be surprised if we end up seeing some kind of V-shaped recovery. That means, as expected, what you typically see after such a sell-off is that we get a huge surge. Of course, it's possible that's something we'll see in a moment on the liquidation heat map, but I wouldn't be surprised if we see something similar again. So now we might have another long phase where liquidations are triggered above and below us because people are going very heavy on longs and shorts. The higher the price rises, the more people go short. The further we fall, the more people go long. And that's how we might just see a long sideways phase here, which can be very exhausting again. Why am I bringing this up? Because in bear markets, and this brings us to this area here, back then at a bear market bottom, I've just drawn something in here, but we'll get to that in a moment. We actually never really had a true V-shape there. What do I mean by that? That we go down and immediately rise again and the bear market bottom is in. No, if we take the actual bottom, the last bear market lasted 61 days. If we look at it here now, the actual bottom where it was initiated, if we now take this longer period, yes, what do I mean by a longer period? Because we already went down here once, then up a bit, but the biggest sideways trend was in that area and we picked up more liquidations again. It would have been about 200 days in total. Just as a small example, you can interpret that however you like. That was really the true bottom where you could say, okay, you caught the bottom perfectly. That was exactly 61 days. The last bear market bottom, if we look at it here, sell off, sell off, sell off. And what happened then? We had about 105 days, maybe even a bit more, 121 days. No, sorry, about 130 days just under that, we had the bear market bottom. And it wasn't just this one, but also the previous bear market bottom. If we look here, that one lasted about 230 days, and just before it really started to rise, it even had another strong liquidation wick. Of course, that was a completely different time. Back then, Bitcoin was worth only $100 to $200, but still, it was a strong liquidation wick. So what have we seen here now in all bear markets when the bottom was in? A long grinding phase that wasn't so ideal and of course caused traders, investors and the like to start having doubts. Will this ever amount to anything again? And that's exactly what we've been experiencing all along. Now the question is 61 days or 200 days. Basically that was also very exhausting, very bullish, but briefly overall bearish as an indicator. But if we look at the current point in time, is this our phase that we're seeing now the one that might be starting now? Or are we actually seeing it, but of course, we've also had a massive increase here from 37, almost 40% at times, which we may have already initiated here. In my opinion, I think that we're only now slowly but surely entering an exhausting phase here. And then even if we go further into it, maybe see the drop go even lower, trigger liquidations. And in order to really see a bottom forming, we'll then have a really long sideways phase, which will eventually form the bottom for us. Also with the divergence I mentioned from a weekly chart perspective. What really becomes interesting for me is when we take this into account, where we might now see a bottom on the weekly chart. The first bullish divergence has already formed. That's from this RSI low in this case to this area here. Yes, we've made a lower low, while the RSI here did not make a lower low. And of course, this could still extend further so that we might pick up the liquidations at the bottom. And then we would actually have had a long established bear market bottom with a wick to the downside, picking up liquidations, which I'll show you later, but you already know how that goes. That's how things look at the current moment. So that's definitely something I would keep an eye on now. I wouldn't be too quick to say we have a V-shaped recovery and are now heading back into a bull market and that the bottom is in. As you've seen, the past has shown that there was a very long accumulation phase afterwards where people gradually, and especially institutions, bought Bitcoin, whales bought Bitcoin and really built up their portfolios, right? I want to show you the smaller time frame in a moment. But before that, let's quickly take a look at the whale orders, because that's of course very, very interesting. Not only are these areas I just mentioned, of course, super interesting. I want to show you something else. Now let's look at all order sizes, and there we see a huge cluster. And if I mark this now and include the area where Bitcoin has actually picked up all the short orders above us, built them up, but also long orders below us. And if I mark this here and we look at how large the orders currently are, it's really astonishing how much people want to short Bitcoin right now. We have filled sell orders here, meaning currently open short positions, $4.01 billion at Binance, $1.64 billion at OKX. We're talking about over 5.6 billion US dollars that are already actively in short positions, while at the same time there are 1.6 billion in longs at Binance and 1.3 billion in longs at OKX. All other exchanges are not included here, but overall we see that just at these two exchanges we have about 2.43 billion more open short orders than long orders. And below us there are still some open limit orders waiting on the long side, while at the same time above us there are also open short orders. And depending on how high we rise, these short orders keep accumulating more and more. They already have 1.77 billion at Binance and here another 727 million at OKX. The long orders in the area where we have large clusters are at 1.36 to 600 million. Yes, in these two areas. So the question is, do they actually want to push the prices down further to maybe trigger all those liquidations? Let's take a look at this now with the liquidation heat map. This area here, 60,000 US dollars down to 59,000 US dollars, and exactly this area, if we include it now, and I'll add the larger orders I mentioned earlier, so for example, everything over 5 million US dollars, then we can see that clusters are currently forming here. And these are of course interesting patterns that I just mentioned earlier. You can also see here 59,000, 159, 58,000, but all of these are large orders placed at almost the same time. And here above us, this small area, which we'll get to now, we see a similar pattern with 12 hours or even a day, where apparently institutional players have positioned themselves who want to buy in here. The cluster below is, I think, self-explanatory. Why have people positioned themselves here? Of course, it's because of the liquidations that are located in this area. The cluster looks intense, but we shouldn't forget that we have a very widely spread cluster down here, which could also be interesting. But this is exactly the area where the institutional players have placed their orders. And by that, I mean the large orders, which are at least 5 million US dollars or more. And here we see almost everything around 13 million US dollars. So this distribution. The second area here, 62,000 US dollars. Why is that so interesting? For that, we need to look at a smaller time frame. Yesterday, we witnessed it. Yes, Trump with the news, no war with Iran after all, no attack. And how this news came in, we can see from this 4-hour candle. That was the surge we saw as a result. And what happened next, of course? We had an incredible number of long orders, whether institutional, algorithmic or whatever, which drove the price up here. And accordingly, what I've marked is, of course, a cluster that's interesting for triggering liquidations. A news bump is always very dangerous, just to reiterate that. And here we can see what are the institutions doing. They positioned themselves exactly in this area here with an incredible number of orders that fit roughly into this exact zone. We can see right after the pump, they started placing their long orders, probably because they believe, hey, these liquidations will be triggered, or we'll make sure they are, get cheap Bitcoins back, and then open new orders again. In this case, it's really interesting to see how the big market players operate here. Let's quickly go back to the liquidation map. There we also see the interesting cluster at 62,000. Why did they, as just mentioned, where do we have it? Right here, the big institutional players positioned themselves. It's actually quite simple. We have an incredible number of large 100 times leverage positions here. We're talking here, all the orange bars are 100 times leveraged positions, which of course are quite interesting for the big market makers to target. This is now 1 day, so that's what came in yesterday. And if we look at the 7-day view, we see exactly in the area around 60,000 US dollars. There are also an incredible number of 100 times leveraged positions, and that's the second area I mentioned down here. For me, it's extremely interesting to target these positions, but up here, these are only Binance orders. If we go down over 7 days, we already have 3 billion US dollars in that area. And on a daily basis, we can also see the small cluster I mentioned. In that area, there's also nearly 1 billion that can now be picked up if we include the exchanges Binance, OKX, and Bybit. So here we can actually see a correlation between the liquidations and the large whale orders and what they are currently planning to do. But we can also see that further down, there are still quite a few orders placed all the way down to the liquidation zones that you already know. I can only keep showing it to you again and again. Model 3, if you have the Pro subscription here and go for 2 years. We have here, and this is also why I placed my long orders there, simply this large liquidation cluster. That would then correspond again with the bullish divergence. We have billions lying here that could be picked up. The question is, would we really enter a bull market and just leave this lying here so close? Will the institutions, the market makers, the whales really let that slide, saying, hey, we have so many billions here that we can collect. We're so close, just a few $1,000s away. And that's where I ask myself, would we really just leave that lying there? I don't think so. That's why I've placed long orders exactly in those areas, both to build up my position and at the same time to make spot purchases. Very briefly about the orders. You can see here the current Bitcoin position is just under 44,000 US dollars, which is of course a bit in loss. 65,000 US dollars is my current entry point. Of course, I would continue to compound further down if we see lower prices. You can see here at 54,370 US dollars, the next long order is waiting, which should push my average price further down. And then I look at, do we really see something like what I mentioned here, a sideways trend forming a bottom? Are we building up new liquidations? But that will be the interesting point where I'll say, then I'll manage things manually without preset limit orders. Otherwise, there's a small Solana order that is still open at the moment. That was my limit order that got triggered. I set my entry price further down, as you can see here, and it is currently around 68 US dollars. The next largest position, with about 25,000 US dollars, is Ethereum, which was compounded twice. At the moment, I don't have any limit orders open there, but if we move into the price range of 1500, 1450, I'll compound again. This order is now about 14 Ethereum, a little more than 14 Ethereum, and I would double it again to bring my average purchase price down to around 1600. After that, I'll wait, and if necessary, I would add extra margin if we really go further down or compound again. And that's where I say, okay, this is a swing position for the bull market, which I will really let run no matter how long it takes, but you've already seen my price targets. I can only point out once again this video, these altcoins for the next bull market, where I will then close my positions. Otherwise, the trading bots that we currently have open in the group, you'll find the link in the video description. Of course, we have a few that are at a loss at the moment, but that's completely fine. And overall, we have many bots in profit and all of them are very, very well secured. Otherwise, that's it for this video. Don't forget to subscribe and leave a like, and we'll see each other next time.